Next then we are discussing under part 2, then we are discussing this one. So far then we discussed part 1 of RBI circulars September month, then this is a part 2 context, and lending against gold and silver directions 2025. So then these directions are applicable to all scheduled commercial banks except payment banks. Except payment banks, these conditions are applicable to all cooperative banks, NBFC, housing finance companies, etc., but except payment banks. Under these directions, a bullet repayment loan, this is a very important one, bullet repayment loan is defined as a loan where the both principal and interest are repaid at maturity. At the time of maturity, at the time of maturity, the principal and interest are paid. That concept, that loan is called bullet repayment loan. So primary gold, silver refers to the metal in any of the form other than jewelry, ornaments and coins. The maximum tenure for bullet repayment loans is fixed 12 months. Very, very important one, this one. The bullet repayment loans is fixed at 12 months. Maximum tenure. Collateral limits have been prescribed at ornaments 1 kg gold, 10 kg silver, 50 kg gold coins, 50 grams gold coins and 500 grams silver coins per borrower, per single person. This is very important, very, very important. So 1 kg gold, 10 kg silver and then 50 gram gold coins, 500 gram silver coins per borrower. So repayment loans, like then the collateral limits. So then వాళ్ళు ఏదైతే సెక్యూరిటీ డిపాజిట్గా ఇస్తారో ఆ సెక్యూరిటీ డిపాజిట్ లిమిట్ అనమాట. The loan to value ratio is capped at 85% for loans up to 2.5 lakh, 80% loans between 2.5 to 5 lakhs, 75% loans above 5 lakhs. So the loan to value ratio, so like if the worth gold, then if you have given 85% of the loan is given on the spectral one, 85 loans up to 2.5 lakh. If 2.5 lakh amount, then if you want as a loan, then 85% cap is there on your asset. 85% for loans between 2 to 5 lakhs, 75% loans up to 5 lakhs. This is a very important point. And the valuation must be done lower of the 30-day average price or the previous day's price, 30-day average or previous day price. And then recovery through auctions, borrowers must be informed in advance. This is a known fact. And reserve price for the first and second auctions must be at least 90% of the current value and not below 85%. That's the point. 85% తగ్గైతే ఉండకూడదు ఎప్పుడు ఆక్షన్ చేసేటప్పుడు. Auction can only be conducted by the trained staff, empaneled auctioneers. Any surplus from the auction must be refunded within 7 days. ఎడిషనల్ అమౌంట్ కనుక వచ్చింది అని అంటే దాన్ని రిఫండ్ చేయాల్సి వస్తుంది 7 డేస్లో. ఎవరికి ఇవ్వాలి? కస్టమర్కి రిఫండ్ చేయాలి 7 డేస్లో చేయాలి. దెన్ దట్ ఈస్ ద ఫంక్షన్ ఆఫ్ దెన్ మేనేజర్ ఆఫ్ ద బ్యాంక్, మేనేజర్ ఆఫ్ పర్టికులర్ బ్రాంచ్. వైల్ షార్ట్ ఫాల్ ఆర్ రికవరబుల్ యాజ్ పర్ ద లోన్ అగ్రిమెంట్. షార్ట్ ఫాల్స్ ఆర్ recovered as per the loan agreements. That is the context. Moving to the next one, an important one, RBI retail direct scheme. So very important, this was asked in SBI PO Mains 2025. RBI retail direct scheme, which was launched on 12th November 2021, is a landmark initiative of the Reserve Bank of India that allows individual investors to directly invest in government securities. Individuals generally then they won't have that facility to invest. Earlier it was not there before 2021. Individuals can also invest in government securities, GSECs, government securities. This scheme aimed to broaden the investor base for the government bonds. So then with this particular one, the customer individual can also reach the government bonds, invest in government bonds and promote financial inclusion and provide a secure low cost investment option for the retail investors. So objectives of this particular scheme, then if you observe, they democratize the access, bring retail investors directly into the India's sovereign bond market. That is the point. India's sovereign bond market. So, then they can invest in, individuals also can invest in bonds, government bonds. Support financial inclusion in the sense encouraging small savers to participate in a safe and long term investment options. Strengthen government borrowings as well. It widens the domestic investor base and reduce the dependence on institutional players. That is the context. And like if you observe here, the account opening, retail direct gilt eligibility is that to open this particular one, to invest in government securities, they should come up with the resident individuals with the PAN, Aadhaar linked mobile number, rupee savings bank account, valid email ID they should provide. Non-resident individuals permitted under FEMA, Foreign Exchange Management Act 1999, then they are allowed to invest. Register online at then RBI retaildirect.org.in, and OTP verification for email and mobile will be done, and KYC, central KYC or video KYC is available. Mandatory nomination details are be filled during the account opening. Joint account allowed with another eligible individual. It is very, very important whether in this particular investments joint account is eligible, allowed or not allowed. Investment options available like treasury bills, government dated securities, state development loans, and sovereign gold bonds. This is the one. So, these are the areas then allowed in general, and market participation allowed in primary market, secondary markets, and investment limits, like if you observe, minimum investment 10,000 rupees per security is a very important one, 10,000 rupees per security. And if it is a gold, sovereign gold bonds, if they are sovereign gold bonds, 1 gram gold is 1 gram is they can buy 1 gram gold. Maximum invest, this is a minimum, maximum investment 2 crore. They can maximum invest in securities, government securities 2 crore per security per auction, government securities and treasury bills, and sovereign gold bonds cap is 4 kg per person. They can buy up to 4 kgs per person per financial year. 4 kg gold they can buy. So, if the kg is 1 crore, then up to 4 crores they can go ahead. That is the point. Gold. Benefits of the scheme, then if you observe, risk free investment, capital gain potential, portfolio diversification is available, possible. Liquidity, easy buy sell with the T+1 settlement. T+1 settlement in the sense the secondary market settlements. Nomination and gifting, up to 2 nominees can be added, modified, gifting of the securities permitted. Then we can gift the securities as well. By buying these securities, we can gift to anyone as well. These are possible conditions with this particular one. Here, like interest rate risk also possible, market risk also possible. Market risk in the sense, like if the conditions are interest rate risk is selling before maturity at a higher interest rate, cycles may cause losses. Selling before maturity, some like then certainly then they loss with that particular before maturity loss, selling before maturity loss. Market risk, prices fluctuate with the macroeconomic conditions through the principle is safe at a maturity. So, market risk will be there, market the principle is safe anyways, the interest may get affected in this particular case. These are possible risks, these risks are there with this particular one. Gilt account is a dematerialized account, like a gilt account is provided, gilt gold or gilt account, like your demat account. Demat account is provided by SEBI, then while you are going to do the transactions with the transactions in capital market, then certainly then SEBI allows the customer to get a demat account. Dematerialized account, demat stands for dematerialized account, dematerialized account. Likewise here, like to do these transactions then individual invest in a government securities, and those they provide a gilt account is used to hold the government securities, like investing in treasury bills and bonds in digital form. That is the context here. Moving to the next one. Yes, here like if you observe this holding securities by using, then they can buy securities using credit or debited with the securities instead of money. They can holding securities credit or debit with the securities instead of money. Dematerialized form eliminates the risk of the physical certificates. There is no chance for physical certificates, entirely digital way. Who can open retail direct gilt RDG account? Retail individuals directly with RBI. CSGL, the other one is CSGL accounts via primary dealers or bankers. Centralized, then general ledger accounts with this particular one, savings general ledger accounts. Then institutions or investors can also go ahead with this particular one, CSGL. So then who can open these accounts? Like two ways, retail investors one, retail direct gilt, that is the first one, and then CSGL, that is a general ledger account. General ledger accounts, then this is useful for the primary dealers as well as bankers. That is one. That is the context here. So, like if you focus on this is more than enough. CAGL account, the context of the Reserve Bank of India, Indian banking generally, then this is used a constituent subsidiary general ledger account we call the CSGL. CSGL stands for, that is a constituents general ledger account, which stands constituent subsidiary general ledger account, and these are the accounts generally. Then these purpose is that maintained by banks or other approved entities, custodians with the public debt office or Reserve Bank of India. So dealing with the government securities and those, then these are allowed, the constituents general ledger accounts. Benefits, then secure, convenient, direct participation of the government debt market in the government debt market, and then which was officially launched, as I mentioned, this one introduced in 2021. A retail direct gilt account, free, paperless and digital. Resident Indians, NRIs and under FEMA, they are eligible. They should provide centralized KYC or video KYC available. Nomination mandatory, up to 2 nominees can be changed later. Instruments available, government securities, treasury bills, SDLs and sovereign gold bonds, SDLs as well. So then they can invest in these areas. So here, like if we observe instruments available, this is a very important one. Instruments available like government securities, treasury bills and state development loans. That is what we discussed. State long-term state development loans, and sovereign gold bonds. Market access, primary auctions, secondary market, and investment range 10,000 minimum, 2 crores maximum per security per auction. And then gold wise, 1 gram gold is the minimum, and then maximum is 4 kgs of gold we discussed. And charges, 0 account opening, maintenance cost, minimal payment gateway charges. That's the point. That is the one. A good idea, is it? That's it. Moving to the next one. Unified lending interface, ULI. As of now, then we are familiar with UPI, Unified Payment Interface, but this is a unified lending interface. This is payment, this is lending. Lending means giving loans or providing loans. Payment means like pay on requirement or paying the amounts in a simple way. So UPI facility is to pay the amount with a QR code, the one facility. QR code we can pay the amount, and that we with the extended mail, no, there's a QR extension we can YBL, these kind of bank to bank transfers, then we can allow. So payment gateway, it's a payment interface, but ULI is a lending, giving loans purpose. So unified lending interface is a digital public infrastructure launched by the digital public infrastructure. So UPI also digital public infrastructure, but for payments. This is a digital public infrastructure, then under digital public infrastructure lending them out. So create a centralized consent based digital platform for seamless credit access, similar to UPI but for loans. UPI is similarly like UPI, but it's for loans. Through standardized open API framework, lenders like banks, NBFCs, fintechs can access the financial and non-financial data from the multiple sources in real time, eliminating paperwork, drastically reducing loan approval timelines. So then integrates Aadhaar, PAN verification, GST and IT return data, land records, and credit bureau reports, credit bureau, CIBIL reports like property search services, educational certificates verification, satellite data for the property or a crop assessment, and even milk pouring data from dairy federations to assess borrower cash flows. So then ఇంత స్ట్రాంగ్గా చేయడం వల్ల ఏంటి అని అంటే కస్టమర్ ఇంకా తిరిగి పే చేయకుండా పోయే ఛాన్స్ ఉండదు. సో దెన్ దే వెరిఫై దే చెక్ ఈచ్ అండ్ ఎవ్రీ కార్నర్ వైల్ గివింగ్ ద లోన్. సో డేటా షేరింగ్ హ్యాపెన్స్ ఓన్లీ with the borrower consent, ensuring transparency and privacy. Once consent is given, the platform collates with all information into the single borrower profile, enabling lenders to make instant credit decisions. So MSMEs, it benefits MSMEs, farmers, rural borrowers by improving the access to formal credit, supporting financial inclusion and reducing the reliance on manual documentation. That is the point. So here, like if you observe this particular one, if you observe this one, data ULI is expected to particularly benefit MSMEs, farmers and individual borrowers from rural areas. That is the point here. Like I'm moving to the next one. So like you can look at this ULI sources, how it authenticates, how it links with the several areas, key data sources like DigiLockers. This is the one. With this particular we can know the PAN card, we can check the Aadhaar card, driving license, passport, all this, then we can. So like land record system, digital land record, milk pouring insights, authentication and verification, account aggregator, consolidates and digital financial information. Already we discussed about EA, then they provide the financial data. So from customers account and real time, housing property search data, and fetches GSTN, goods and services tax network data, satellite data, provides satellite imaginary analytics data, all this stuff. And like if we move to the next point, the positive pay system, PPS, this was also asked in SBI. Then if you know this particular concept, then it's a wonderful concept, one very wonderful one. So Reserve Bank of India introduced this positive pay system via a circular dated on September 25th, advising all the banks to implement it from 1st January 2021. So strengthening the check security and prevent frauds. What is the purpose of this one? Strengthen the check security and prevent the frauds. To prevent the frauds. This is the main intention behind introducing this positive pay system. Under the system, whenever the customer issues a check of a specified value, 50,000 and above, they must submit key details, account number, check number, date, amount, payee name, through the internet banking, mobile banking, or by visiting the branch. These details are then shared by the bank with the National Payment Corporation of India NPCI for the validation. When the check is presented under the check truncation system for clearing, the bank cross verifies the submitted details with the electronic image of the check. If the information matches, the check will be cleared, and there is a mismatch, the check is flagged for review and may be returned, thereby preventing the fraudulent or unauthorized encashment. So, as per the RBI guidelines, PPS is mandatory for checks, very important point. Then they ask these type of questions in your exam. PPS is mandatory for checks more than 5 lakhs and then above in CTS clearing, while the submission remains optional but recommended for checks between 50,000 to the 5 lakhs to avoid return enable faster clearance. So, high value checks 5 lakhs plus is presented without PPS data, it will be returned with the reason advice not received. That is a point. What is that? Advice not received. Once the details are submitted, they cannot be modified or deleted. So, the customers must provide accurate information. That is the point here. That is all about PPS, positive pay system. Moving to the next one. Yes. RBI regulation on payment aggregator directions. Payment regulator, payment aggregator, payment aggregators. Don't get confused with the account aggregators and payment aggregators. The account aggregators generally then they provide financial data of the customer, and payment aggregators, these payment aggregators, then these are authorized deal. These generally then regulating the payment system, like how much amount paid, and then then what is the way to get paid, online or physical or cross border. These type of information is stored here with the payment aggregators. So, the framework is also covers authorized dealer category 1 banks, scheduled commercial banks that engage with the payment aggregators, ensuring systemic oversight. So, here Reserve Bank of India has issued RBI regulation directions 2025 to the payment aggregators, a framework for regulating payment aggregators, both bank and non-banking entities. Directions came into effect immediately to apply entities facilitating payment on behalf of the merchants, and the framework also covers authorized dealer category 1 banks, scheduled commercial banks that engage with the payment aggregators, ensuring systemic oversight. The bank does not need separate authorization to act as a PA. So, banks ganaka payment aggregator ga behave cheyali anante special ga veetikantu authorization akkarledu. Like for example, if it is a non-bank, they must obtain a certificate of authorization from RBI through online portal. Non-banking payment aggregators must be companies incorporated in India under the Companies Act 2013, Modified Companies Act, with the activity of operating as a payment aggregator included in their memorandum of association. And the entities regulated by another financial sector regulators must obtain no objection certificate from their regulator and then apply within the 45 days of obtaining this one NOC. So, అది క్లియర్. ఇప్పుడు బ్యాంక్స్ కనుక అయితే ఎలాంటి ఆథెంటికేషన్ అక్కర్లేదు. అదే నాన్ బ్యాంకింగ్ అయితే దే మస్ట్ కమ్ అప్ విత్ ద COA, దట్ ఈస్ సర్టిఫికేట్ ఆఫ్ ఆథరైజేషన్. ఫర్ ఎగ్జాంపుల్, ఇఫ్ దే ఆర్ నాట్ రెగ్యులేటెడ్ బై రిజర్వ్ బ్యాంక్ ఆఫ్ ఇండియా, RBI రెగ్యులేషన్లో లేని సంస్థలు కనుక అయితే దే షుడ్ బ్రింగ్ NOC, నో అబ్జెక్షన్ సర్టిఫికేట్ ఫ్రమ్ దేర్ రెగ్యులేటర్. ఎవరైతే రెగ్యులేటర్ ఉంటారో వాళ్ళ దగ్గర నుంచి నో అబ్జెక్షన్ సర్టిఫికేట్ తెచ్చుకోవాలి. దాన్ని తెచ్చుకున్న 45 డేస్లో దెన్ ఇట్ విల్ బి క్లియర్డ్. The days of obtaining for NOC, it will be cleared. NOC తీసుకున్న 45 డేస్లో ఇది క్లియర్ అవుతుంది. Entities must apply for the authorization 31st December or wind up the operations by 28th February 2026. ఈ గ్యాప్లోనే ఈ ఆథరైజేషన్ కోసం అప్లై చేయడం అనేది జరగాలి. Minimum net worth requirements. So, the entities must meet this minimum requirement 15 crore at the time of application 25 crore by the end of the third financial year and maintain the same thereafter. So then to get permission as a payment aggregator, they should come up with a minimum of 15 crores at the time of minimum net worth of the company should be 15 crore, and then at the time of application and 25 crore by the end of the third financial year. And the computation of the net worth follows RBI guidelines and includes the compulsory convertible preferences shares, but excludes the deferred tax assets, and entities with the FDI must comply with the consolidated FDI policy and FEMA regulations. If it is FDI, foreign direct investment, in that case then they should follow that particular one. The directions categories payment aggregators into PAP, physical, PAO, online, POCB, cross border, with the separate rules for inward outward transactions, and must maintain a separate inward collection accounts, outward collection account. The maximum value per cross border transaction is 25 lakhs. Maximum value payment. Outward transaction cannot be executed using small PPIs. So then likewise then they have given some limits here. Strict provisions for KYC and due diligence, contact point verification is very important, very required. Centralized KYC, and merchants with a turnover below 40 lakhs may be onboarded through the simplified KYC, but onboarding must be regularized December 31st, after which all the new merchants must be fully compliant, and non-bank payment aggregators must register with the FIU India, and the directions emphasize cyber security, fraud prevention and risk management, requiring a board approved information security policy, annual system and cyber security audits by certain, and here if we observe, the auditors will this particular apply as per the 2018 circular on storage of payment system data. Finally, the dispute mechanism, as PA must have a dispute resolution mechanism. With the timelines for refunds and chargebacks, publish clear privacy and merchant policies, and appointment an officer with an escalation matrix for grievances redressal. Redressal process, grievances redressal. PAs cannot set transaction amount limits and must ensure refunds are made to the original payment method unless payer instructs otherwise. So that is the context. So as a whole, the directions repeal older circulars. So then 2010, 13, 15 2010, 13, 15 and 2009 circulars on electronic transactions involving intermediary for entities whose COA applications are pending. Then the directions repeal the older circulars. All approvals granted under old circulars remains valid and are deemed to have been granted under the new directions. There is a point here. And moving to the next one, interoperable regulatory sandbox. Simply then we can discuss this particular one. So along with the financial sector regulators, then has operationalized the interoperable regulatory sandbox, a unified testing framework for hybrid financial products and services that fall under the purview of more than one regulator. So enduku ante ee sandbox enduku ante IORS sandbox enduku ante oka regulator kinda oka regulator ki oka area kante ekku regulate చేస్తున్నప్పుడు అంటే ఇప్పుడు రిజర్వ్ బ్యాంక్ ఆఫ్ ఇండియా ఉంది, నెంబర్ ఆఫ్ ఫంక్షన్స్ కదా, లెండర్ ఆఫ్ లాస్ట్ రిసార్ట్ అన్న, బ్యాంకర్ టు బ్యాంక్స్ అన్న, బ్యాంకర్ టు గవర్నమెంట్ అన్న, కరెన్సీ చెస్ ఉంటాయి, ఇలాగ చాలా కాన్సెప్ట్స్ ఉంటాయి. కాబట్టి హైబ్రిడ్ ఫినాన్షియల్ ప్రొడక్ట్స్ అండ్ సర్వీసెస్ ఒక ఆర్గనైజేషన్ రెగ్యులేటరీ బాడీ ఇలా హైబ్రిడ్ యాక్టివిటీస్ కనుక చేస్తుంది అని అంటే అండర్ పర్వ్యూ ఆఫ్ మోర్ దాన్ వన్ రెగ్యులేటర్, ఒక మోర్ దాన్ వన్ రెగ్యులేటర్ కాంటెక్స్ట్ ఏదైతే ఉండాలో Reserve Bank of India, the financial sector regulators has operationalized this particular interoperable regulatory sandbox unified testing framework for hybrid financial products and services that fall under the purview of the more than one regulator. Unlike individual regulatory sandboxes, which are regulator specific, IORS provides a single window mechanism for innovators, enabling them to test cross sectoral products without approaching the multiple regulators separately. That is the context. So, this initiative was developed by the Inter-Regulatory Technical Group on Financial Technology, set up under the Financial Stability FSDC subcommittee, and the groups includes representatives from Reserve Bank of India, SEBI, IRDAI, FSCAI, IFSCA, PFRDA, Department of Economic Affairs and Ministry of Finance, Ministry of Electronics and Information Technology. So, then under this framework, the principal regulator is the regulator of the product's dominant feature, while the others act as the associate regulators. So, then others works as the associate regulators, primary regulator, associate regulators. Likewise, then the classification is given, and the testing is carried out as per the PR's sandbox rules with the coordinated input from ARs. Eligible participants include financial institutions, fintech companies, regulatory technology providers, startups, foreign fintechs, etc. And these products eligible for testing include digital payment solutions, insurance technology, wealth management technology, regulatory technology, supervisory technology, and cross-border financial services. That is the context here. Moving to the next one, simple one. This is a simple one. RBI issues guidelines for payment aggregator and gateways. Already we come across this one. Then read this particular one. Read once so that like you will get understand. Already we come across this one. And moving to the next one. 15th Finance Commission grants released. So 15th Finance Commission and the Government of India has released this grants rural local bodies during the financial year 25-26, disbursing the first installment of the unified grants for the Tamil Nadu and Assam, first given to these two states. Tamil Nadu grants will support 2,901 gram panchayats. So 15th Finance Commission granted amounts for this development of the local bodies, rural local bodies. Gram panchayats are best examples of rural local bodies. Block panchayats, district panchayats, while in Assam, funds will cover 2,196 gram panchayats, 156 block panchayats and 27 Jilla Parishads. So the grants recommended by the Ministry of Panchayati Raj, Ministry of Jal Shakti and Ministry of Finance. So these are released installments each financial year by the Ministry of Finance. And untied grants can be used by Panchayati Raj institutions for needs under 29 subjects in the 11th schedule of the Constitution, excluding salaries and establishment costs. And tied grants are earmarked for services in sanitation, fecal sludge management and drinking water, including rainwater investing and recycling. So Finance Commission, constitutional body, we know Article 280 is related to them, and then chaired by the 15th was chaired by the N.K. Singh. That is a concept here we have. This is a part number 2 we have.